Hello traders, I welcome you to E-marketTubeFX, and you are with your trader Henry Ampem. Today we are going to look at a topic which has been quite challenging for many traders in this industry, and I know you would like to know what this topic is. I will disclose everything to you. Today we are going to look at how to master trading psychology. Yes, I know many of you might have read books which has to do with trading psychology, or watch videos on social media which has to do with trading psychology or how to master trading psychology. Today, in this video, I'm not going to tell you to master your trading psychology, or I'm not going to tell you to control your emotions as and when you are trading. But in this video, I'm going to share with you, or in other words, I'm going to teach you how to master your trading psychology. Yes, how to master trading psychology. Yes, that is what I'm going to teach you in this video. In this video, I'm going to teach you how to control your emotions as and when you are trading. Because in this industry that we find ourselves in, if you are a trader and you can master your psychology as and when you are trading, or you can control your emotion as and when you are trading, then it means you're on top of the game. So in this video, as I earlier mentioned, I'm not going to tell you to control your emotion or master your trading psychology, but rather I'm going to show you how you're going to do it. So in summary, this video, or the content of this video, is going to show you the secret of these pro traders, the secret of the 1% traders, what makes or what brings the difference between the 1% traders and that of the 99% traders who keeps blowing account every now and then. So in this industry, we have 1% traders who keep making profit consistently from the market. So in other words, the market keeps feeding their account with the liquidity on the market. Then also we have other traders at the other hand who are struggling to make profit on the market. So they are rather feeding the market. They are rather feeding the market with their hard-earned money. So what brings that difference is what we are going to look at today. How to master your trading psychology on this in this industry that we find ourselves in. The name again is Henry Ampem, and the channel name is E-marketTubeFX. So on E-marketTubeFX, as we usually do, we do our best to bring classroom on YouTube. So now, as you can see on your screen, this is Euro USD chart. As you can see, my trend line neatly drawn, my support and resistance neatly drawn, everything is on point. So as you can see, as and when price reach a particular zone, you see the reaction. So in this industry, we have something we say that you plan your trade and you trade your plan. And that is what you see on the chart. So it's very interesting. Yeah. So if you're a newbie and if you come into this industry and you think that you have experience when it comes to gambling and you can just push a button for a buy and sell and expect a consistent profit from this industry, bro, you are deceiving yourself. In this industry, we plan whatever we do on the chart, then we trade our plan. So today I have a lot to share with you with regard to this concept or this topic, which has to do with how to master trading psychology. So as I earlier mentioned, with E-marketTubeFX, we bring classroom on YouTube. So I've prepared some ideas on the slide that I want to share with you as and when the need arise. We'll come back to the chart. Then we'll look at the technical aspect of the things that I'll be mentioning on the slides to you guys. So if you've joined me on YouTube or any other social media handle, all I want to tell you at this very moment is that do well and watch this video to the end. Then also do not forget to subscribe, you like and share. And as much as you keep on sharing my content or this video with friends and loved ones, they will also have opportunity to learn from what you are learning from E-marketTubeFX. The E-marketTubeFX is a channel for newbies. E-marketTubeFX is a channel for traders who are struggling to make consistent profit from the market. All the concept topics that we discuss here on this channel is to help you traders to do it right way, to do it like the way these professional traders do it, so that at the end we will all go to the market and analyze the market effectively. So as and when you are pushing a button for a buy, you know why you are pushing a button for a buy. As and when you are pushing a button for a sell, you know why you are pushing a button for a sell. So it means that you'll be doing it like the way the pro do. So there's something I always keep telling my students, that we can't skip the positive things that these professional traders do and expect positive results. So I have a lot to discuss with you in this content, so make sure you watch this video to the end so that you too can learn something from this video at the end. So as you can see on your screen, how to master trading psychology. Yes, how to master trading psychology. This is what we are going to look at today. So for us to begin, as you can see now, the 1% trader mindset. So all that we are going to do today is what I've summarized in this image. Yes, all that I'm going to discuss with you today is what is presented to you in this image. So as you can see, we have 1% traders. What they do that helps them to make profit on the market is what you are seeing. Then also we have the 99% traders. What they do that I don't want to use the word that help them to continue blow account. What they do, the destructive trait which has influenced the consistent blowing of account, is what you are seeing on your screen. Yes, this is just a pictorial view of all that I'm going to discuss with you today. So if you've joined me on YouTube or if you had opportunity to watch this video, please don't just watch at the beginning and stop there. Make sure you watch to the end so that the content of this video is going to shape in your mindset, change you from the things that you continue doing that cause you to continue to blow account, so that you too can do it the right way, like the way the professional traders do, so that at the end we will all go to the market and make that dream profit that we are looking for. So for us to continue, let's look at the objective. So the objective is to help newbies or the 99% traders to know what the 1% traders, that is the pro traders, do before, during, and after each trading day or week that has helped them to develop the right trading psychology to trade the financial market, which has resulted in consistent profit over a long period of time and still counting gains. Yes, so that is the first objective. Now let's look at the second objective. The second objective is to help newbies or the 99% traders who are struggling to make consistent profit from the financial market to know the destructive trait which is eating them unnoticed. Yes, I would like to take this section again, this part again, is to what? Is to help newbies or the 99% traders who are struggling to make consistent profit from the financial market to know the destructive trait which is eating them unnoticed, making them blow trading account consistently. So some traders are making profit consistently from the market. Then the other traders, on the other hand, are also consistently blowing accounts. We are going to dive more into it. So now we are going to look at the 1% trader mindset. So the 1% trader mindset is what we are going to look at. So to elaborate more on this, all I want you to take note as we continue with this video or this content that I'm giving you, the idea that I'm about to share with you, is to help you to note the things that these professional traders do. These 1% traders, what they do before, during, and after each trading day, that has helped them to master their trading psychology. That has helped them to control their emotions as and when they are trading. So in the image that I showed you earlier on, this image, the things that these professional traders do, the things that these 1% traders do, that has helped them to continue make profit consistently from the market is what we are seeing. So that is what we are going to look at deep down. Then the destructive trait, as you can see here on the image, is what we are going to look at. So we have a lot to discuss in this video, so you make sure you watch this video to the end. So the 1% trader mindset, the core qualities of professional forex traders, the very trait that consistently set them apart and make them profitable in the long run. So over here we are looking at the qualities. We are looking at the qualities of this 1% traders that has helped them to consistently make profit from the market is what we are looking at. And the first one has to do with what? Hard work. Now, the second quality has to do with what? Patience. The third quality has to do with what? Strong mindset. The fourth quality has to do with what? Confidence. Then the fifth quality has to do with what? No greed. So these are the 5 qualities or traits of which is working behind the scene, helping these pro traders, helping these 1% traders to consistently make profit from the market. We are going to look at it in details, so that at the end you too can learn what these professional traders have been doing. So at the end, I'm sharing a secret of these professional traders with you. Yes, what they do, of which maybe you are not aware. So earlier on, you heard me saying that this market is not a gambling system where you can easily push a button for a buy or sell and expect consistent profit from the market. You can push a button for a buy today and get profit. You can push a button for a sell today and get profit. But hey, take note, that profit that the market has given you today is just a loan. Yes, it's just a loan that the market has granted you. So if you push a button, maybe you have maybe 200 USD in your account, and you push a button for a sell. Right now gold is selling. You push a button for a sell and you're able to get maybe 50 USD from the market, or maybe you're able to get maybe half of your account, maybe 100 USD. So now your 200 USD account balance is now what? 300 USD or 250 USD. Take note, that profit that you have on your account or in your account is just a loan that the market has given you. So if you are gambling and you've gotten this profit, it's just a loan. Yes. I know what I'm talking about. It's just a loan the market has given you. A day is coming there, you push a button for a buy. You gamble, you don't know what you are doing. You push a button for a buy or sell. You mark it on a wall. The market is going to take the profit plus the principal, the money that you use to deposit. The market is going to take everything. So it is always important to do it the right way. So earlier on, you heard me saying that we cannot skip these positive things that these professional traders have been doing and expect positive results. We can't. We don't have any option than to learn these expert traders, what they have been doing, and that's what we are looking at. So I earlier on mentioned that one of the top qualities is what? Hard work, patience, strong mindset, confidence, and that of what? No greed. We are going to look at it in details. But before, let's look at that of the 99% traders. So the qualities of 99% traders that blow account and consistently lose money. So the destructive traits that negatively affect trading performance is what we are going to look at. And one of them is laziness. Please don't be offended. The issues we are discussing here is very deep. Don't be offended if you happen to be on the other side of the coin. So what I mean is, if you happen to be part of the 99% traders who keep blowing account, don't be offended. Take whatever I'm telling you in good faith and just learn from it and change the way you do your things on the market. Then just come to the comment section, then give me the feedback after you've applied whatever I'm about to discuss with you in this video. So as I earlier mentioned, one of the destructive traits is laziness. The second one has to do with impatience. The third destructive qualities or trait is weak mindset. The fourth happens to be fear. Then the fifth one happens to be what? Greed. So we've looked at the qualities of the professional traders, which is the 1% traders, and now we are looking at the destructive trait of the 99% traders. So that is what you are seeing on your screen. So in the next section, we are going to look at in details what the hard work means. So as you can see here, the hard work, the 1% traders, that is the pro traders, continuously engage in learning, backtesting, journaling, and analyzing the market. So you see what these pro traders do. So if you see a pro trader making huge profit from the market and taking a screenshot, maybe posted on a social media platform, you don't see these things there. Yeah, you don't see these qualities there. You don't see this quality. You only see success. But behind the success, there's fire. There is this fire. And that fire is what we are looking at. So as I earlier mentioned, the 1% traders or the pro traders continuously engage in learning. They learn. They don't stop learning. They don't stop learning. They backtest. Whatever they've learned, they backtest. Then also they journal, they write down their experiences. Then they also do what? They analyze the market. It's something that they do like a routine. Let's continue. Why it matters. Why it matters. So as you can see on your screen, deep understanding. Why the hard work, the consistent learning, the backtesting, the analyzing of the charts, the journaling of experiences with regard to the charts, why it matters. Deep understanding. The 1% traders, that is the pro traders, steady price action, economic reports, technical patterns, and market behavior consistently. These professional traders don't stop doing this. They steady price action, economic report, technical pattern, and that of what? Market behavior consistently. So if you are falling in love in this market, the right thing you have to do is to seek knowledge. I keep telling my students in my community that the very moment you fell in love or in this industry, the next thing you have to do is to seek knowledge. Don't be in a hurry to deposit money in your account. Do not be in a hurry to deposit money in your account because you've seen Kojo Forex, or you've seen Harvey Forex, or you've seen Jeffrey Benson, or Dapo Willis, Andy Goat, Forex King, these great traders that we have in Africa and that of the international world or those in the developed countries. You see them posting their wins, so you want to be like them. So you've also deposited maybe 1,000 or 2,000 USD. You want to flip that account and get 100,000 USD today. Bro. I pray you learn something from this. So as I earlier mentioned, this 1% trader, they study price action, they study economic report, technical pattern, they are aware of what? The technical patterns, the chart patterns, they are aware. The candlestick patterns, they are aware. The market behavior, they are aware. So when they go to GBP, JPY market, how the behavior of the market, they are aware. When they go to gold market, the behavior of the market, they are aware. When they go to the crypto market, which is the BTC, USD, or the Ethereum and the rest, they are aware of how those markets behave. They are aware. They know the instrument or asset that correlates. They are aware. So this market is not just pushing a button for a buy or sell. There must be an idea for a reason for that button that you are pushing for a buy. There must be a reason for that button you are pushing for a sell. So as I earlier mentioned, I said they are aware of economic reports. What are we talking about? Look here. Let's go to Google Chrome. So as you can see, this is Forex Factory. So as we Forex traders, anytime before we open a chart to do our analysis, one of the important sites that we visit is Forex Factory. For what reason? We go there to look at what? The economic calendar, so that we will know what is ahead of us. The economic data which is about to be released with regard to the currency that we want to trade, policies that government is making with regard to the currency that we want to trade, the time in which that news or that data will be released. Everything is presented here. Whether it is of high impact, low impact, or medium impact, everything is presented here. So the colors that you see here, the red color represents what? A high impact news, which is the NZD CPI, which is a high impact news. We also have a yellow color here, which is the GBP, which is a what? A right move HPI news data, which is a what? A low impact news. Then also we have an orange color here, which is a what? A medium impact news. So if you want to trade any asset, we go to Forex Factory. Just a server, the Forex Factory serves as a what? A headlight. So we know the time in which that news will be released. The date. First we know the date. As you can see, so we have Monday. We have Monday, October 20th here. So on Monday, October 20th, you know that we have a what? A news with regard to this currency. Whether it is of a high impact news, a low impact news, or medium impact news, you will know. Then the time. Then also, when you come here, we also have what? Data of the previous data on that particular news. Then what this expert, analyst, what they have forecasted, you also know. Then the actual will be when the news will be released. So as and when the news is released, that is where we will have the actual data. So sometimes the data which is being forecasted by this analyst sometimes synchronize with that of what? The exact data released. So we go there to find out all this before we push a button for a buy. So if you are pushing a button for a buy and you know that around maybe 2 p.m. there will be a news on CPI, there will be a news on what? NFP. There will be a news on NFP or CPI. And you know that this data, as and when they are released, is of what? High impact news. And you happen to be in a trade. As you are in profit, what do? Quickly you exit the market. If you are a fan of trading news, maybe you may choose to remain in the market. If you are not a fan of trading news, as and when that data will be released, you'll be aware. So quickly you close your trade before that data is released, because as and when that data is released, be it CPI or NFP, it causes volatility on the market. The market shake. So you know when this data will be released, then quickly you exit the market, you secure whatever profit that you've gotten before that news will be released, so that you will not be caught by surprise. So that is what we are talking about. And we don't only have the Forex Factory. When you go to Forex Factory, it gives you every data that you need, or whatever news that will be released with regard to the currency that you want to trade. The time, as I earlier mentioned, the date, the time, the impact, the level of impact. I've already explained to you the colors. Then the previous data, the forecast, and that of what? The actual, of which as and when the news will be released, you see it there. Then quickly you use it to take your decision whether you're going to push a button for a buy or sell. So we study economic report. Then when we come to that of investing.com, is also another important site of which what we pick economic data from. Investing.com. As you can see, the page is loading. Investing.com is also another important site that we pick what economic news from, or economic news from, as you can see. So before we push a button for a buy, I had opportunity to read an article from a pro trader in the US. He said before he push a button, or before he open a chart to do his analysis, the one important thing that he doesn't stop doing is to take into consideration the factors that influence price on the market. And what are those factors? News, the fundamentals. So all these things that I'm sharing with you has to do with what? Fundamentals, because they influence price on the market. They influence price on the market. They factor those things. So if this professional trader, after considering the fundamentals, the news hovering around the USD, whether it is NFP, a positive news on NFP, a strong data, if that trader is pushing a button for a sell in the Euro USD market, he knows why he's selling the USD. Because the news released with regard to the NFP is a strong data. My dear trader, so this is how these professional traders do. They are aware of all the fundamentals. So when they are pushing a button for a buy, this is what encourages them. This is what pushes them, or this is itself as a backbone to remain in the market. They are not in a hurry. And they know why they push a button for a buy, or they know why they push a button for a sell. Because they've read all the news with regard to that currency that they want to trade. So if it is positive, they know. If it is negative, they know. So if it is a positive news, they know how to trade that market. If it is a negative news, they know how to trade that market. So they are aware of economic reports. They are aware of economic data. They are aware of the fundamentals. If I'm to give you a deeper breakdown of what is actually happening, I'm a Ghanaian. Why the cedi is performing now. Right now, when we check the rate, the USD and that of the CD, the rate, it is now 10 CD, 80 pesos. It's now 10 CD, 80 pesos. Just last 3 weeks, it was heading towards 13 cedis. And do you know why? And formerly, it was even around 17 CD to $1. Later came around 11 CD, hoping that it will drop to maybe 7 CD. Then it started going up again to 12 CD. Then heading towards 13, and now it is around what? 10 CD, 80 pesos. This is not magical. It is the fundamentals which is influencing what? This depreciation, which is helping the CD to perform well. And if I'm to give you a small breakdown or a gist of what is actually happening with regard to the fundamental, government is doing something positive. Government is doing something positive which is helping the CD to perform well. The former government, which is the MPP government, did their best by implementing a policy called oil for gold, then gold board. So these agencies that I'm mentioning were put in place by the former government, which is the MPP government, but they were not able to do their best to implement everything fully so that the objective of putting in place these agencies will materialize. But this current government, the NDC government, is doing something positive which is helping the CD to perform well as against the USD. And what am I talking about? You know, with the gold for oil, formerly, if you want to buy oil, we need to exchange the CD to dollars. Then we use it to pay our international suppliers. So the CD there was pressure on the CD. Pressure on the CD always, because oil is something that we need. It's a necessity. We need to fuel our cars. Then the other gadget that uses fuel, we need to fuel them. So always there's pressure on the CD. Government always has to exchange the CD to dollar to pay the international suppliers so that we can get oil in the country. Now, what this oil for gold for oil is doing, which is that agency, that board is doing, is that instead of paying the international suppliers with the USD, the local producers of gold, they are paying them with what? With the CD. So if you go and extract gold, they will pay you with the CD. Then they will take the gold. You also go, another person will also go and extract the gold. Then they will pay that person with what? The CD. Then they will take the gold. Another person will also go and extract the gold. They will pay that producer of gold with what? With the CD. Then they will take the gold. So they keep accumulating the gold. When they accumulate enough, they will use the gold to pay the international supply. So right now they are doing what we call barter trading. Formerly, our forefathers, that is what they do. Oh, I have rice. You have maize. I need your rice. Okay, we check the quantity. Take my rice. I take your maize. I have cow. I need fish. You have cow. You have fish. Okay, I'll get you a sizable meat. Then I'll take your fish. You also take my meat. That is what our forefathers used to do. We call it barter trading. And that is the strategy gold for oil is doing to accumulate more gold, to use it to pay international suppliers so that we can get the oil into the country. So right now, there is no pressure on the CD. That is what gold for oil is doing. That agency, that is what they are doing. So now, there is no pressure on the CD. This is the fundamental. This is something which is helping the CD to perform well. Now, when we come to gold board, you agree with me that in this country, I'm using Ghana's situation as an example because that is the country that I come from. So that if you are also elsewhere, where you come from, your country currency is not performing well, Take note, it's because of the policies that your government is putting in place which is causing that currency to either to perform well or not to perform well. Now, when we come to this country, you agree with me that if you extract cocoa, or if you're a producer of cocoa, you can't send your cocoa to the world market to sell. You have to give it to a cocoa board. Whatever quantity that you have to sell your cocoa seed to cocoa board. In a situation where you try to smuggle out of the country, you'll be caught. It's a criminal act of which you can be sentenced. So it means that cocoa board is the sole agency which is mandated to take our cocoa to the world market, sell, get the USD and bring it to the country. Right now, this gold board is doing the same thing. Gold board is mandated to be a sole agency to weigh, buy and sell gold. So these local producers of gold, if you produce gold, this gold board will buy the gold from you. You can't take it to the world market or travel with the gold to the world market and sell yourself as a producer. You have to sell it to gold board. So gold board is accumulating more gold. And right now, when you go to the world market, gold has reached its record high. We are talking about 4,000 plus USD per ounce. That is what is happening now. Gold has reached its record high, and the country keeps accumulating more gold, exporting more, getting more foreign exchange reserve. So there is no pressure on the cedi. There is no pressure on the cedi. So this has helped the cedi to perform well as against the USD. So formerly we used to pay 17 cedis to get just 1 USD. Now it has depreciated, or the rate has come down to 10 cedi, 80 pesos. This is something that, so if you're a trader, it is something that you should know. So if you are pushing a button for a sell in a USD GHS market, you know why you are selling that market. So you see, if I tell you that this industry that we find ourselves in, it's not a gambling platform that you can just push a button for a buy or sell. This is the meaning. So we read news. If you're a trader, you should be hardworking. You should read news, learn, keep learning, read the fundamentals. What policies being put in place by a government with regard to the currencies that you want to trade? You visit this website, the Forex Factory, the investing.com, then also FS Street. It's also another important website where you can pick news from so that you know what is happening. Then you also have Bloomberg. Bloomberg.com. It's also there, which also also gives this financial news of which as a trader you need to visit to read so that you know what is happening with regard to that currency that you want to trade. So forex traders are hardworking people. The 1% traders that we are talking about are hardworking traders. They don't stop learning. They allow themselves to be taught right from the onset. They went through mentorship. They buy book, they read, they invested in themselves. And today, if you see them making that insane profit from the market, hey, they went through fire. And today, the market is paying them. Remember, you are with E-marketTubeFX and you are with your trader, Henry Ampemdako. Let's continue our presentation. So today, as I earlier mentioned, we are looking at how to master trading psychology. So we are still looking at it. So as I earlier mentioned, in this industry that you find yourself in, it's not just pushing a button for a buy or sell. There is a reason why we push a button for a buy or sell, And there is a reason why you push a button for a sell. Yes, there is a reason. So if you are pushing a button for a buy, there is a reason. If you are pushing a button for a sell, there is a reason. So that is what we are looking at this very moment. So why it matters, you've already looked at it. They are aware, these traders are aware of price action, economic report, technical pattern, and also market behavior. Then also refinement, they continuously test strategies, track performance, and improve based on real data. Yes, they continuously, this 1% traders. So all I want you to understand here is that these are the things what they do that help them to be of top-notch psychology as and when they are trading. So they are not afraid of price movement on the chart. So if there is a news with regard to the NFP or the CPI, which is a positive one, they know in that market, if the USD happens to be the base currency. If you've not watched that video, there's a video on what? Forex currency pairs, which explains the base currency and that of the quote currency. So if they are in the USD JPY market, of which the USD happens to be the base currency, they know if the data given during the NFP is a strong one, they know the USD is going to buy. If they are in the Euro USD market, of which the USD happens to be the quote currency, they know the USD is going to sell. They are not afraid, because they know that pattern that they push for a buy in the USD JPY market, that economic data of the NFP is going to support their entry for that buy to make profit from the market. Remember, you are with E-marketTubeFX, and you are with your trader Henry Ampemdako. Today we are looking at how to master trading psychology. That is what we are looking at. Yes, that is what we are looking at. I'm teaching you guys how or what these pro traders do before, during, and after each trade. That is what we are looking at. Why it matters. Another point has to do with what? Adaptability. Market evolve. Hardworking traders, that is the 1% traders or pro traders, adapt with new conditions rather than sticking blindly to old habits. They adapt. This professional trader, this 1% traders, they adapt to new condition. They don't stick to old habits. So that is one thing I want you to take note of. So as you can see here, I said the 1% trader, they do what? They track, they journal. The image that you see here is from me. How I see the market, I journal everything. Just give a sketch. How I expect price to move. That is what we are seeing. Then after everything, I write down my results. What the market gave, either positive or negative. So most traders think that it is only when you win trade, that is where you have to journal. No, when you lose, journal. Because as you journal that experience, it's going to help you. It's going to serve as a what? A headlight. We are going to learn lesson why you lost that trade. So next time, if you are taking such a trade or when such a setup unveil itself, you know how to do it. You not do it like the way you did yesterday, which rendered what? A lost trade. You're going to do it right next time. So an example is what you are seeing here. These are the positive things these professional traders do that help them to control their emotions and when they trade. They've done it. They've journaled. They did it yesterday. They've journaled. It is in their book. Another day, same thing. They've journaled. It's in their book. So when it happens, when that same setup unveils itself for the 5th time, they know how to take that trade. They will not be afraid. They are of top-notch psychology because they know that setup, this is how the results is going to be. That is what you are seeing here. So if you're a newbie and you come into this industry and you think you have experience in betting, so you can just come into the industry and just gamble and have your way out, I pray that this content, this video will serve you well. This video will help you to have a change of mindset. Yes. So example, a hardworking trader review every trade for the week. Logs, wins, losses, and studies what could have been done better. So at the end of the trading week, we review what went on during the trading week. We review our trade. What went well and the bad. We review everything so that in the new trading week, when that same setup unveils itself, we will not repeat our mistakes. Remember, you are with E-marketTubeFX and you are with your trader, Henry Ampem. Today, we are looking at how to master trading psychology. The next point I want us to look at is patience. So the 1% traders, which is the pro traders, wait for the right opportunity without forcing trades or chasing price. So this 1% traders, they don't chase price. They don't chase price. When price is moving for a buy, also they don't chase price. They wait for price to reach their POI before they take decision. Some wait for days, weeks, and even months. In the case of day traders, swing traders, and positional traders, respectively, for price to reach their POI, which is point of interest, before they push a button for a buy or sell. Yes, some traders wait for days, hours. The day traders, you see them sitting behind their PC or their phone with them, monitoring price just to reach their point of interest before they push a button for a buy. In the case of these swing traders, they wait for days and weeks for trade to reach their point of interest before they push a button for a buy or sell. Now, look here. Let's go to the chart, then you know what I'm talking about. Look at what you are seeing on this chart. You see this resistance drawn here. Why? Because I knew market sold here. So I have a resistance that there is I have a resistance here of which I expect price to come back to this resistance. If price or buyers are able to break the resistance, then we have a pullback here. Then it means market is going to continue buying. The euro is going to continue buying. But if price get to this point and there is a pullback or there is a reversal, as you can see here, with this dodgy candlestick form here, then it means market is going to sell. Just as it sold when price got to this point, when price got to this zone. The evidence is what you are seeing here. The evidence is what you are seeing here. Then after as price was coming down, we saw some small pull up, price coming up. I just drew this, there's a fair value gap here. There's a fair value gap in this candle. So I drew this fair value gap. What am I looking for? So with this fair value gap, I was expecting price to break this fair value gap and come up. And if price is not able to break the fair value gap and reverse below this fair value gap, it means market is going to continue coming down. And the evidence is what you are seeing here. So it means that you need to have knowledge about the market so that as price keeps forming or the candlesticks are forming on the chart, you know what to do. So I always keep telling my students that if you acquire the knowledge of the market, you view the chart with your eye. But you are not viewing the chart with your eye. You are viewing the chart with the information that you have in your brain. That is what we are going to use to interpret what is going on the chart. And a typical example is what I'm doing with you at this very moment. As price was coming down, I also have this trend line. I expected price to reverse when it gets to the trend line. And the evidence is what you are seeing here. As price get to the resistance, that formerly it was a support, of which price book came down, so it's now a resistance. I was expecting price, as price is pushing up, I was expecting price to sell. The evidence is what you are seeing here. The bearish candle that you see here, let me zoom. Let me zoom so that you see what I'm talking about. Let me zoom so that you see what I'm talking about. You see the bearish candle form here. This is a 2-hour time frame that we are talking about. A lot of pips. So on the market, we don't just push a button for a buy or sell. We don't just push a button for a buy or sell. We wait for price to reach our point of interest. Then we take a decision. Remember, you are with E-marketTubeFX and you are with your trader, Henry Ampemdako. Let's continue with the presentation so that you too can learn something from this video, so that whenever you open chart to do your analysis, you do it the right way, so that you also make that dream profit that you are looking for. I always tell my students that the knowledge of the market is more important than the money that you deposit in your account to trade. And the reason is what you are seeing on the screen at this very moment. So patience is what we are looking at this very moment. Why it matters is what you are seeing on your screen. So with regard to why it matters, the first point is what? Avoid overtrading. Why these professional traders patiently wait for price to reach their point of interest before they take decision. Avoid overtrading. The 1% trader, which is the pro traders, don't jump into market just because it opens, or chase price because market is buying or selling. They wait for price. They wait for high probability setups that match their trading plan. That is as what I presented to you in the charts. They wait for price to reach their POI. They wait for high probability setup. So price has gotten to resistance. It sold yesterday. So as price has gotten to resistance now, what is going to happen? What will be the reaction of price? Is price going to break the resistance and have its nose on top of it to continue buying? If there is a reversal over there, then it means that market is going to continue selling, or market is going to reverse. So what do? You also join the selling move. That is what I showed to you guys on the chart on Trading View. So you take note. Then wait for confirmation. So these professional traders, or the 1% traders, rather than predicting or guessing, the 1% traders or pro traders wait for price action to confirm their bias. So these 1% traders, they don't do what? They don't guess. They don't predict. They wait for confirmation. So you hear this 1% traders that they wait for price to reach their point of interest. So price reaching their point of interest, not that price has gotten to resistance, so therefore they have to what? They have to buy. Let me give you a typical example, then you will know what I'm talking about. Let's go back to the chart, the confirmation that I'm talking about. As I earlier mentioned, market, as you can see here, over here, market sold here. So as price is heading above, we're waiting for a reaction, a confirmation, and the confirmation for this reversal is what you are seeing here. The dodgy candlestick formed. The dodgy candlestick formed here is a confirmation that market is going to reverse. So that is the confirmation that we are talking about. That is the confirmation. So if price was able to what? Price, we had a bull candle, price was able to have its nose above, then it means that market is going to go up. But even with that one, we have to wait for a pullback on the resistance, which will then tend to be a support. We have to wait for a pullback before we even join the bullish move. But when price got here, even though this candlestick happens to be a hammer, but look at the wick. The wick represents what? The selling pressure which was exerted, which happened during the formation of this candlestick. That the wick that you see there, it represents rejection from what? Sellers. Because buyers did their best to push price up. Buyers did their best to push price up. Let me zoom for you to see. Buyers, they did their best to push price up. But what happened? As price got to the resistance, that is where the sellers also came in strong to push price back to very close to where it opened. So look at the body of the candle. Sellers brought price back to where it opened. So the wick that you see here is not just a drawing. It's not just a drawing. Or it represents, or it's giving an information of the selling pressure that happened when price got to the resistance. So this is a perfect confirmation to join the selling move that happened on the market. Traders. So over here, all that I want you to understand is that price movement from this top up to this low all started from here. So if you're a trader, we always talk about edge, a system that helps you to foresee what is going to happen in the market. That is what is going to make you the profit. That is what is going to make you the profit. And it doesn't come by chance. Learning, consistently allow yourself to be taught. Go through mentorship, invest in yourself. That money that you've deposited to trade, use that money, invest, buy courses, go through mentorship, buy courses, buy books, learn, so that you can also do it right like the way these 1% traders do. Remember, you are with E-marketTubeFX, you are with your trader Henry Ampem. Today, we are looking at how to master trading psychology. That is what we are looking at today. So if you've joined me on YouTube, Facebook, or any other social media handle, all I want to tell you at this very moment is that do well to subscribe, you like, and share. So that as you continue to share my content with friends and loved ones, they will also have opportunity to learn from what you are learning from E-marketTubeFX. Now let's continue with what I'm sharing with you at this very moment. Why it matters. Why it matters, the patience. So letting trade run. So with the patience allow the 1% traders, which is the pro traders, to hold on to winning trades instead of closing too early out of fear. So look at this. Look at this. If this is not patience, tell me, what is it? If this is not patience, price movement from this top up to this low, if this is not patience, tell me, what is it? So if you have knowledge about the market, like what I presented to you on the chart, if you have knowledge about the market, you will not rush closing trade left and right. I know we have some traders called scalpers. That is the type of trading style that they've adopted. But there are some traders, they don't have any knowledge about the market. When they see market moving or price moving for a sell, boom. Maybe price is even market is going to continue selling. But because they don't have any knowledge about the market, with just 10 USD profit that they had, they just close the trade. A trader who have better understanding of the market will wait for price to fully grow, profit to fully grow in his account. And that is what we are seeing here. So example, a patient trader sees a support zone, wait for bullish candlestick confirmation, and enters after the signal, not before. So as I earlier mentioned, I demonstrated to you on the chart, you wait for confirmation. You don't enter the market before confirmation. And that is the mistake of many newbies. Please, we are looking at what helped these pro traders to remain of what? A top-notch psychology. Things that they do behind the scene before they enter the market. That is what we are looking at. So before they enter the market, they do all these things. So when they enter the market, they know what they are doing. Nothing moves them, nothing shakes them. They are very patient. They are very knowledgeable. They know what they are doing. They are not in a rush. They are not in a rush. So I pray you also learn something from it. I've already told you that we can't skip the positive things that these professional traders do and expect positive results. No, it can't happen. We can't skip these positive things that these professional traders do. These 1% traders, we can't skip and expect positive results. We don't have any option than to follow, to learn from them, so that we can also make that kind of profit, if not the same. Depending on the account size that we are trading, we can also make consistent profit from the market instead of we giving our money to the market. So I once read an article also from a pro trader in the US saying that the market is like a system that takes money from traders who are indisciplined to traders who are disciplined. The market is like a system that takes money from traders who are not knowledgeable to traders who are knowledgeable. So you see how the thing works. The market is like a system that takes money from traders who are impatient to traders who are patient. So if you look at the size of the coins, I think you will take a right decision so that you belong to the side that can help you to what? To make profit from the market. One, we've talked about discipline. We've talked about patience. We've talked about what? We've also talked about knowledge. And that's what we are looking at. The next point we are looking at is what? Strong mindset. So the 1% traders, which is the pro traders, have developed a mental resilience to handle wins, losses, and uncertainty. What are we talking about? Why it matters? Why this matters? Handle losses professionally. These professional traders, they handle losses professionally. Trading involves losses. A strong mindset prevents emotional reaction like revenge trading. If a professional trader or this 1% trader, they lose trade, that is it. It's normal. They will not be in a hurry to enter another trade to get their money or to recover their money from the system. No, they don't do that. They don't do that. Consistency under pressure. Even during market volatility, the 1% traders or pro traders stick to their trading rule. They stick to their trading plan. They stick to their system. So as you continue to journal your experience on the chart, out of it you will gain what we call a system, a rule. If I don't see A, B, C, D on the chart, I will not take this trade. Let's go back to the chart so that you see what I'm talking about. Let's go back to the chart. If I don't see A, B, C, D, I will not take this trade. A typical example is this fair value gap that you see here. So already joining the market from this point after a confirmation, this dodgy candlestick formed here, which represents a rejection from sellers as buyers were doing their best to push price up, then sellers coming in to take market from them, leading to the formation of this dodgy candlestick you see here. After joining market here, price continues selling. Market or buyers trying to push price up. Over here, as I told you, we have a fair value gap here. So with this fair value gap, I've drew the fair value gap. What am I expecting? I'm expecting price either to break the fair value gap and continue with the bullish move, or price will reverse either from the mid of the fair value gap or at the tip of the fair value gap below. And that is what you are seeing. So as price rejected here, with also confirmation of this bearish candle, if I want to scale in, if I want to enter other position on the market, That is where you are supposed to scale in. So it means you can't run away from knowledge about this market. We can't skip these positive things that these professional traders do and expect positive results. We can't. It is a must that we learn from them. It's a must you invest in yourself, go through mentorship, allow yourself to be taught, invest, read books, buy books, apply, practice, journal. You practice, that is, you backtest whatever you have been taught. You practice whatever you have been taught. That is where you back testing. Then you'll be journaling your results in that form. So out of that, you also get what we call the screen experience, the chart experience. You get all, so that you also do it the right way, like these professional traders do. Remember, you are with E-marketTubeFX, and you are with your trader Henry Ampem Dako. So let's move on with what we are looking at. So we are looking at a strong mindset, of which we cannot joke with. We cannot joke with. So if you join me on YouTube, do not forget to subscribe, you like and share, so that anytime I make new video, you will be the first person to watch. Then those who share my content with will also have opportunity to learn from what you are learning from E-marketTubeFX. The next point, which has to do with why it matters, has to do with what? Emotional control. So the 1% traders, which is the pro traders, understand that trading is a game of probability, not certainties, and avoid panic. So some traders, or most of these 99% traders, think that immediately they push a button for a buy, market must buy. So if market fails to buy, they get disappointed. That is where you see most traders smashing their phones or their laptops, destroying it just because they lost trade. No. On the market, we think on improbability. We think in probability. We don't think in certainty that, hey, I push a button for a buy, so market must buy. No matter what, market must buy. I push a button for a sell, so no matter what, if market goes against me, that is the end of the journey. No. On the market, we don't do like that. This is not how the 1% traders trade. This is not how this 1% trader, this is not how they do it. They think in probability. They think in probability. So after you've done all your analysis, there is a rule. Price has gotten to your point of interest. You want to enter the market. There is a rule. Do not trade more than 1 to 2% of your trading account. So if you have 100 USD account that you are trading, price has gotten to your point of interest. Fine. What do? Let's go to the chart. As I earlier mentioned, as and when they did arise, we'll go to the chart. Then I present to you what you are supposed to know. Now, as price has gotten to this point, you are trading with 100 USD account. Price has gotten to this point. You are not supposed to trade 1 to 2% of your trading account. So you go to the lower time frame. You place your stop loss behind what? So even before price come to this low, you get the confirmation from the lower time frame. You get a confirmation from the lower time frame. Your stop loss will be behind the resistance. Then what? You join the selling move. So over there, so if you go to 30 minutes time frame, you will see the selling move in the 30 minutes time frame. So the 30 minutes time frame will give you a 30-minute pictorial view of what is happening in the 2-hour time frame. So your stop loss will be behind this resistance that you see here. So as I earlier mentioned, you are not supposed to trade 1 to 2% of your trading account. So with that trade, if you are having 100 USD account, it means that if you are trading 2% of it, it means that your risk, which is your SL, should be what? A 2 USD. So if it is 3 USD, you are targeting what? You are targeting 6 USD. Meaning 1:2. 1:2. If you are targeting 9 USD, meaning 1:3. So it is something that trader, you can't joke with it. Just go through the principle. You're not supposed to trade 1 to 2% of your trading account. So if your Excel is maybe beyond 2 USD and it entered 3 USD, it's okay. You enter one position, you are good to go. Because that account that you are trading is small. You can't over leverage. So you see many newbies with just one trade, one bad trade, taking almost 70% of their trading account. Hey, my bro, that's not how these professional traders do it. No, they don't do it like that. They don't do it like that. That's why I keep telling you that if we are going to make profit consistently from the market, we have to do it like how these professional traders do, the 1% traders. What they have been doing to make profit consistently from the market over the long period of time. We have to learn from them so that we do it like the way they do, so that we can also remain in the game for a long time. So as I earlier mentioned, they think in probability, they don't think in what? Certainty. So you have to take note. They think in probability, they don't think in certainty. So please stop destroying your trading gadgets. Anytime you lose trade, stop destroying it. It's too bad. When you are in profit, control, relax. Don't be shaking. Don't over celebrate. When you lose trades, that is not the end of the journey. Don't be thinking in certainty. Don't over leverage. In situation where we over leverage, that is where it subjects us to what? Unnecessary emotions. You'll be panicking. No, we don't do that on the market. So example, after 3 losing trade, a strong-minded trader takes a break or evaluate calmly, not with frustration or fear. So that is what I want to tell you. When they lose with this professional trader, when they lose on a streak like 3 times, what do? They just take a break, they evaluate calmly. They don't panic, they don't do revenge trading. No, I've lost tries on the market. Let me increase my loss size and recover everything. Hey, these professional traders don't do it like that. They don't do it like that. So you have to take note. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimda. So today we are looking at how to master trading psychology. What these professional traders have been doing that has helped them to remain a top-notch psychology as and when they are trading. What these professional traders have been doing that has helped them to control their emotion as and when they are trading. So in this video, I'm not telling you to control your emotion as and when you are trading. In this video, I am not telling you to master your psychology as and when you are trading. I'm teaching you how to do it. What these professional traders have been doing behind the scene that has helped them to control their emotion as and when they are trading. What they have been doing behind the scene that has been helping them to be of a top-notch psychologist, and when they are trading, nothing moves them. It's like a rock. Nothing shakes them. So the things that has been making them to behave like a rock, nothing shakes them, nothing moves them as and when they are trading, and that is what we are looking at. So today I'm giving you the secret of these professional traders. I'm giving you the secret of these professional traders, and I pray you watch this video to the end so that you too can learn something from it, so that this content can change the way you trade. If you happen to be on the other side of the coin, if you happen to be part of the 99% traders who keep blowing account, this content, this video is going to change. I pray you watch to the end so that it will change your trading lifestyle in a positive way. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimdako. The next point I want us to look at is confidence. The 1% trader, which is the pro traders, believe in their strategy and trading ability without arrogance. Yes, these 1% traders, they believe in their trading strategy Why? Why is it that they believe in their trading strategy? I earlier show you an image from me, what I journal during a trade, a BTC trade, a setup. It is something that I've been playing on the charts. I journal. The results too, I journal. You saw it. So next time when that same setup unveils itself, I know how to take that trade. So it is something that this professional trader, they do it consistently. So when that same setup unveils itself, they know, they believe in that strategy because it is something that gives them results, has been giving them results consistently. So as price is behaving, price is doing its own thing on the chart, they are waiting, confidently, calmly waiting for price to reach their point of interest. So immediately they get confirmation on their point of interest, they know how to take that trade. They know how to take that trade. They know how to trade that trade. So it is something that as a newbie you need to take note. Why it matters. Trust the process. The 1% traders, which is the pro traders, confidence allow them to execute their plan even when results aren't immediate. So you see traders, these professional traders, they will enter position. In the first 30 minutes, they will continue to be in loss. Nothing moves them to close the trade. The first 30 minutes, they see red signals. The litmus papers all turn red. Nothing moves them to close the trade because they know that at the end, price is going to move in their favor. It is something that has been going on every now and then as and when we trade. So the 99% traders on the other side, immediately they enter the market within the first 5 minutes, they see the red signal, market is not going well. So they will be in a hurry to close the trade in loss. These professional traders, the 1% traders, they will remain in the market. Within the first 5 minutes, they are in loss, they are there. As long as price has not hit their SL, they are in the market. The first 10 minutes, price still not to hit their SL, they are in the market, patiently waiting for that good time. The next 15 minutes, they are still in a loss. The first 20 minutes, they are still in loss. First 25 minutes, still. First 30 minutes, still. Nothing moves them to close that trade. As long as price has not hit their SL, they are still in the trade. But what happens to that of the 99% trade? They will cry. Why? Because they've over leveraged. They've entered so many positions. So as price is not moving in their favor, their account is going down, the drawdown is becoming big. So the next option is to just close the trade in loss. So upon closing the trade, almost 70% of their trading account gone. Because if they are to wait, the 30% will also be swept off. My bro, this professional trader, they don't do it like that. They don't do it in that way. So I keep telling you that we can't skip this positive thing that these professional traders do and expect positive results. We have to do it like the way they do it, so that we too can get consistent profit from the market. We should stop feeding the market with our earned money. We should do it the right way. We should invest in ourselves to acquire the right knowledge as to how to trade this market. We should invest in ourselves, buy books, buy mentorship, learn, practice, backtest, journal. Learn, practice, backtest, journal. Learn, practice, backtest, journal. This should be a routine. So with time, you see that you have a real data of which you are going to use to face the market. You have a real data that you are going to use to face the market. A strategy of which you are going to use to trade this market and make profit, of which you'll be following your trading rules. This is what these professional traders do to have that top-notch psychology on the market. This is what they do that help them to control their emotions as and when they are trading. And that is what I'm giving you. Also, avoid second guessing. The 1% traders or pro traders enter and exit trades decisively, avoiding hesitation. They know when they are to enter the market and when they are to exit. The professional traders, they know when they are to enter the market and they know when they are to exit. Remember, you are with the E-marketTubeFX and you are with your trader Henry Ampemdaku. The next point I want us to look at is reduces anxiety. The confidence of the 1% traders, which is the pro traders, make them focus on following the process, not observing over every resource. They are focused on following the process, not every resource. So last, I was telling my students in a webinar, that is what I do. When new members join my community, I organize webinar for them to give them education as to how this market works. So that as I post a signal that we are selling a market, or we are selling, or we are buying or selling a particular asset, they know how to do it. It's something that I do. I told them that until I got to know how this market works, I realized that as and when you follow your trading plan, as and when you follow your trading plan, as and when you follow your trading system, as and when you follow the rules, those three things that I've mentioned will rather bring the profit. But if you chase money, if you chase profit, if you chase money, as and when you are trading, you rather give the market what you have in your account. And I know this thing that I've said, any professional trader watching this video will relate, will understand, will bear with me. I repeat, this market that you and I have fallen in love that we are trading, I'm giving you a secret. As and when you follow your trading rule, as and when you follow your trading system, as and when you follow your trading plan. So we have a saying that you plan your trade and trade your plan. As you do these three things, any one of them, either you follow your trading rule, you follow your trading system, or you follow your trading plan, that one will rather bring the results. But if you chase price or you chase money on the market, you rather end up giving the market your hard-earned money. That one doesn't bring results. But as you follow these three, any of these three things that I've mentioned will rather bring you the results, will rather bring or rather populate. It will rather populate your account. So if your account, you have 100 USD, later you see that 20 is added to it. Not by magical. Later you see that another 10 USD will be added to it. Maybe another 5 USD will be added to it. The rule, just following the rule. Just following the rule, not focusing on the results. So what do you call it, profit or money on the market? Just following the rule. If I don't see A, B, C, D, I will not take this trade. Yes. You didn't see that, so you didn't take the trade. You saw A, B, C, D on the chart. Boom! You enter the market. Results gained. You exit the market. You know what you are doing. So as price has gotten to your TP, boom, you are done for the day. If I don't see A, B, C, D, I will not trade. I will not take this trade. Then you see other traders, the 99% traders on the other hand. Price is moving for a buy. Market is moving for a buy. Then they will enter po. Market is moving in a sell. The bearish move has started. Then they will push a button. Po. Market is selling. A small pullback account. Phew, everything is gone. They'll go and load the account again. Then they will sit waiting for price to move. And mainly they open their chart, they see price move for a sell. Then they will enter market again. Po. Small pullback account. Phew. Everything is gone. Then they will join the scam crusaders. Forex is a scam. Forex is a scam. Please, this same market that is a scam, that is what is feeding Koyo Forex. That is where E-marketTubeFX is also earning from. This same market that you are saying is a scam, that is what Happy Forex is gaining from to buy these flashy cars. This same market they are talking about is a scam. That is where Jeffrey Benson is gaining from, is buying this Bugatti, the Cybertruck. This market that you are saying is a scam. That is where John Gatti, the Forex king, these big traders that we see them on social media, the Dapo Wheelies. These traders in the developed country, that is what is feeding them. What is it that they are doing that is helping them to gain or make consistent profit from the market? That is what I'm sharing with you. Invest. Use that money. Use that money. So I keep telling my community that knowledge before deposit. The knowledge of the market is more important than the money that you deposit in your account to trade. After watching this video and you keep doing your things the way you used to, I don't know what to tell you again. My dear subscriber, my dear viewer watching me at this very moment. If you keep doing things the way you used to, I don't know what to say again. I don't know what to say again. So these professional traders, they know when they are to enter the market and they know when they are to. They don't hesitate because they have knowledge of the market. They are not gambling. They have knowledge about the market. They are not gambling. Even after a loss, the 1% trader, which is the pro traders, know their edge will play out over time and doesn't abandon their system out of doubt. So you see these newbies, traders who are struggling to make profit consistently from the market. The system that they are using failed them today. It gave them profit yesterday. It failed them today. No. Why? Yesterday I won. Today I use the same strategy. Why I lost? No. No. I have to abandon the strategy. This strategy, no. This strategy, no. I won't trade with this strategy again. I won't trade with this strategy again. Please, this is not how these professional traders do. They don't abandon their strategy like that. First, they think in probability. They've done the analysis. Today, they've gotten profit from the market. If tomorrow they don't get profit from the market, they don't abandon their strategy, but rather they review. So through reviewing, they will learn from their mistakes and do it better next time. When that same setup unveils itself, they don't abandon their strategy like that. So if you abandon it, you go for another strategy. When that one also give you losses, you abandon and go for another one. It's like a woman, it's like a man who is not ready to accept one woman in his life. When that woman misbehave, divorce, go for another woman. When another woman misbehave, divorced, go for another woman. When another woman misbehave, that woman misbehave, divorce, go for another woman. Hey, then you marry the entire women, the women in the world. By the time you die, you've married almost like 120 women. Because they will give you problems. Yes, they will give you problems. So all that I want to tell you at this very moment is that we don't abandon this professional, the 1% trader, they don't abandon their strategy like that. But rather, as and when they lose, they review where the lapses are. Fill it, then do it right next time. Remember, you are with E-marketTubeFX and you are with your trader, Henry Ampem Dako. The next point I want us to look at is no greed. Yes, no greed. So we are looking at it in details. The point that we look at earlier on, which has to do with hard work, patience, and the rest. We are now on no greed. The 1% traders, that is the pro traders, control their desire. They control the desire for quick, massive profit. They control the desire for quick or massive profit. They control that. They control that. So in a situation where the 99% traders with a trading account of maybe 100 USD or maybe 200 or 1000 USD enter position of which a small pullback is going to take 80 to 70% of their trading account, they don't do it like that. They don't trade like that. They make sure they follow their trading rule. Every trade, every position, they are risking 1 to 2% of their trading account. So if they've entered 2 trades, it means that those 2 positions that they've entered, they are risking 1 to 2%. They are risking 2. If it is 1% or 2%, that is it. They don't over leverage. They don't over leverage. So in a situation where market doesn't go for them, they are losing only maybe a small portion of their account. So before they enter the market, they've already defined the trade. They know how much they are losing in case the trade doesn't go in their way. But this 99% trade, what do? They are not even aware of how much they are going to lose in case price go against them. They only see that when price starts going against them, then they will start being in panic. Quickly, they will close their trade in loss. Immediately they close their trade in loss, price will begin to go in their favor. Then they will hold their head. I should have waited. So as this thing continue, they will subject it to be a spiritual thing that is coming from someone is influencing from a family, or an enemy is causing them to continue losing on the market. No, please. No. This is not how these professional traders do it. This is not how these professional traders do it. So you make sure you also learn from it so that you do it the right way. So why it matters: manage risk better. Greedy traders, that is the 99% traders, risk more than necessary, chasing profit. Then 1% traders, which is the pro traders, know that capital protection is key. So I always tell my students that in as much as we've deposited money in our account to trade, we do our best to protect that money that we have in our account. Yes, we are looking for money. Yeah, we are looking for money. But as when you are trading, make sure you protect that capital that you have in your account. How do you protect that capital? Your Excel. Immediately you enter the market, you already define your trade. I'm ready to risk 1 to 2%. I'm risking 2% of the trader account. So immediately you enter the market, your Excel intact. So in a situation where price does not go in your favor, price hit your Excel, you are out of the market. You don't sit down to price to the drawdown to continue increase to eat all the assets or the capital that you have in your account. They don't do it like that. You don't trade like that. So in as much as you are looking for money, we do well to protect the capital that we have in our account. Then also, I remember I told my students that, do you know that as and when you are not trading, as and when you are not trading, you have your capital in your account. It's also part of profitable trading. I know you understand this. As and when you are not trading, your 150 USD, your 200 USD, your 1000 USD, your 500,000 USD or 100,000 USD or 10,000 USD in your account. As and when you are not trading, you are monitoring price to reach your point of interest before you enter the market. You are not trading, no. You are just monitoring price to enter your point of interest. It's also part of profitable trading. You will never understand this until you lose that money that you have in your account. Now, your money is in your account. So you do whatever you want to do. But the very day you lose that money in your account, you understand this, what I'm telling you now, that you not trading, monitoring price, waiting for price to reach your point of interest before you take trade is also part of profitable trading. Yes. Whatever I'm telling you is something, not something that I've read from book. It's something that personally I've experienced. And I'm sharing my knowledge with you. And I know every professional trader who is watching this video at this very moment will agree with me that you not trading, waiting for price to reach your POI is also profitable trading. Enter position anyhow, and when that money leaves your account, and next time price has gotten to a nice zone of which can fetch you profit and you have nothing to trade, it is there that you understand what I'm telling you today. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampemdako. Today, we are looking at how to master trading psychology. So if you join me on YouTube or Facebook or any other social media handle, all I want to tell you at this very moment is that do not forget to subscribe, you like and share, so that as you continue to share my content with friends and loved ones, they will also have opportunity to learn from what you are learning from E-marketTubeFX. Let's continue. So why it matters? Discipline, exit. So the 1% trader, which is the pro traders, don't overstay trades, trying to catch every pip. They take profit at predefined level. So as you can see here, they take their profits from where? Predefined level. So this is where the TP is. So as price has gotten to the TP, what is it again? They are out. If market will continue selling, let it sell. Last I gave a signal in my VIP group. I gave a signal and the lady exited the market. There's this trader who joined my community and she joined my VIP group that we are trading. I've said the TP, everything, but she exited the market early and gold was still selling. And she was asking me, Henry, gold is still selling. Can I enter the market? And I told her, at which Excel? Because we've given Excel, I've given you guys Excel stop loss where we are to sell the market, then the risk, everything set. You are in profit. You didn't wait for price to hit your TP and you've exited the market. Now that price is going down, keep selling. The profit keeps increasing and you also want to sell. You are selling at which Excel? Where are you going to place the Excel? And she said, Where are you going to place the Excel? And it is something that I know many of you newbies, many of these 99% traders, they do this mistake. So this professional trader, so if you have knowledge about this market, you will take informed decision when you are to enter the market and when you are to exit the market. It's something that you have it at your fingertips. So this is how it is, and I pray you also understand. So they exit, they take profit from a what? A predefined levels. They take profit from a predefined level. Why it matters? Long-term mindset. The 1% traders or the pro traders focus on consistency over hitting home run. So no risk, no Ferrari slogan used by most 99% traders. So you always hear this 99% traders, no risk, no Ferrari. So with a 100 USD account, they will enter market until they've exhausted all their margin. Then you hear no risk, no Ferrari, no risk, no Ferrari. So small pullback account 0.00. This is not how these professional traders do. This is not how these professional traders do. I had opportunity to listen to Kojo Forex. He started trading from 2012 and still he is in the game. What is this gentleman doing that has helped him to remain in the game since 2012? What is this gentleman doing that has helped him to remain in the game? Sticking to your trading rule. Do not over leverage. Think in long term. The things that this gentleman is doing that is helping them to remain in the game is what we are doing now. It's what I'm sharing with you. The things that they do behind the scene is what I'm sharing with you. It's what I'm sharing with you. So I pray you also learn something from this so that you also will not be singing the no risk, no Ferrari. You'll be over leveraging, of which a small pullback, then the account is gone. So that you do it the right way, like this, like the way these professional traders do. A greedy trader, that is the 99% traders, might double down on losing trades, hoping to recover. The 1% trader, which is the pro traders, cut the losses early and follow their plan. So that is it. They cut losses early and follow their trading plan. So I pray you also learn something from it. So final thought, these qualities work together to be disciplined trader, the 1% trader. For instance, you, that is newbie or a gambler, need patience to wait for the right trade, confidence to execute it, and strong mindset to handle whatever the resource is. Combine all these and you are well on your way to trading like a pro. So if you combine all these qualities, all these good traits, you're on your way trading like a pro. So I pray that whatever I've shared with you with regard to how or what these professional traders, the 1% traders, have been doing behind the scene, that has helped them to remain of what a top-notch psychologist, and when they are trading, you take a cue from it. What they have been doing behind the scene, that has helped them to control their emotions as and when they are trading, you also take a cue from it, so that you do it like the way they do it, so that you also make profit consistently from the market. It's not funny to continue blowing account. It's not funny to continue to give your money, your hard-earned money, to the market. It's not funny. It's not funny. So if you fall in love in this industry, please seek for knowledge. Don't chase money. Don't chase money. There's this guy, I don't want to mention the name, who joined the community. I did a webinar. After the webinar, he said, Henry, I want to join your advanced trading. And not that he joined the advanced trading that I told him this. As we were doing the webinar, and even in the WhatsApp group, this guy, anything that I post, this guy keep asking why. Like everything is about why. So when we were doing the webinar, when we started the webinar, during the chat conversation, sharing ideas, I told him that you know how to trade. I told him that you know how to trade. I was not surprised. After the webinar, he DM'd me that he want to join the advanced training so that I take him through. Now, as I'm talking to you now, he's trading, doing his own analysis, because he's not led by money. Before he met me, he said he has keep blowing account every night, and he want to know how to do this thing the right way. So this guy keeps asking questions. Why? So as you continue to find solutions to all the why, that is where you are going to get the concept as to how this market works. But if you let money lead you, I'm not sure you survive. If you let money lead you, because as you find solutions to the why, you begin to have a better understanding of price movement on the chart. You begin to have better understanding of what what is telling you before you, which is the chart. What you have in front of you, which is the chart. You begin to have better understanding of it, so that you can use the chart to make the right deal, because that is where we do the analysis. We don't do analysis on the wall. We don't play football on the wall. We play it on the field, the chart. So that is where you have, if in a situation where you have coaches that can read the game whilst the game is going on, not what they've done in the dressing room, whilst the game is going on. If you have coaches or a coach that can read the game, they can change the results. So for us forex traders, whilst market is in session, if you can read or interpret whatever is going on the chart, that is what is going to make you the profit. And how do you do this? You have to allow yourself to be taught, go through mentorship, invest in yourself, buy books. So as I earlier mentioned, you learn, you practice, you backtest, you journal, you learn, you practice, you backtest, you journal, you learn, you practice, you backtest, you journal. So with this, as you keep on doing this, it will turn like a routine. As you are doing that, you begin to gather experience. You begin to gather real data from the chart. So next time when that same setup unveils itself, as you do that on the demo account, getting the results, as you are able to fund your account and your trading life account, that same setup, price keep repeating itself, patterns keep repeating itself, patterns, be it chart pattern, candlestick pattern, it keeps repeating itself. Setups keeps repeating itself. So as it repeats itself on the chart, you know how to take that trade. Remember, you are with E-marketTubeFX and you are with your trader Henry and Pimdako. Now we are looking at the 99% traders. We've already looked at the point. Now we are going to look at it in detail. So earlier on, what we did has to do with the 1% traders, the positive trait, the good trait, which is helping them, or qualities which helping them to make profit consistently from the market, is what we look at, and that is what has been helping them to remain on a top-notch psychology. That is what has been helping them to control their emotion as and when they are trading. We've looked at all. Now we are going to go deep down with regard to the 99% trader, the destructive traits that is causing them to continue blow account consistently. That is what we are going to look at. So whichever side of the coin that you belong to, I pray, if you belong to the 99% traders who keep blowing account, I pray that at the end of this video, everything is going to change. Everything is going to change. So if you've joined me on YouTube, make sure you subscribe, you like, and share. Now let's continue. So with regard to the 99% trader, the first point, as you can see, laziness. Please don't be offended. Whatever we are discussing here is something that has been going on in most 99% traders' lives. So if you hear me saying laziness, please, it's not an insult. Don't be offended. And I pray you learn from it so that your trading journey will be of a smooth one. So the first point is what? Laziness. The 99% traders avoid the necessary work involved in learning, practicing, and planning. Yes, most 99% traders, that is the 99%, they don't like learning. All that they know is money. I know what I'm talking about. A guy joined my trading community. I did a webinar with them. He said he want to learn how to trade this market. I told him to create a demo account so that I can take him through some of the basic things that we discussed during the webinar. He didn't even know how to place trade on the MetaTrader. I guided him to create an account with the broker that I'm working with. Then I gave a signal on BTC to place the trade on the broker and see how it goes, so that you have a feel of how we place trade on the broker. Then a few minutes with the 200 USD virtual money in his demo account, within a few minutes, price has hit his TP and he has gotten 5 USD. He sent a message, wow, so simple like that? I said, yes. This is how we make profit from the market. So earlier on, as I was guiding him, he was prompting me like he was expecting a result quickly, but I told him that he should wait. I'm waiting for like price to reach a point of interest, then I'll give him the signal. And he keeps sending message, hello, hello, hello. I said, wait, relax. I'm waiting for price to reach POI. So he sent me, what is POI? And I said, point of interest. I'm waiting for price to reach a zone that we can sell. So when price go to that zone, I send a signal that sell at this price. This is where your SL will be. Then this is where your TP will be. So I showed him everything in the chart. And I was even sending screenshots as to how he's going to place the trade. So within a few minutes, he hit TP and he said, wow. The next day, this guy said he want to trade like. I said, bro, we don't do it like that. Oh, you can't be whole. This guy didn't listen to me. He sent a screenshot. He has deposited 12 USDT. Oh, wow. I said, bro, relax. We don't do it like that. The market is risky. Whatever you have, invest to acquire the knowledge before you start going live. I was there the following day. He said he has blown the 12 USD. Please don't be in a hurry. Don't be in a hurry. So the 99%, that is the major problem. It is difficult for them to allow themselves to be taught. They don't want to learn. They don't want to practice. All that they are after is money, which is very risky. So no back testing or journaling. The 99% traders don't review their performance, so they repeat the same mistakes. So as I earlier mentioned, they keep repeating. No journaling, no practicing, so they keep repeating the mistakes of yesterday. Keep repeating, keep blowing account, keep repeating. Then always saying that it is others who are causing them. It's because of forces in their family which is causing them to continue blow account. No, there is no force in your family causing you to blow. The force is you. That bad force is you. Telling you the truth. That evil, that bad force causing you to blow the account is you. Listening to me. If you happen to be part of the 99% traders, it is you. You are failing to do the right. I started with you. What these professional traders, the 1% traders, have been doing, which is helping them to make profit consistently from the market. Have you been doing any of them? Starting from the fundamentals, learning, allowing themselves to be taught, get the knowledge, practice, backtest, journal. Have you been doing any one of them? When was the last time you visited Forex factory to have a view of the economic data or calendar which is about to be released, or news which is about to release with regard to the USD or the GBP or the Euro? When was the last time you did that? When was the last time you visited FS Street to read news hovering around the currency that you want to trade? When was the last time? All you know is what? Just pushing a button for a sell. All you know is the technical. Now you draw your trend line, you draw your support. That is all. Please, you knowing how to draw support, knowing how to draw your trend line, or knowing how to draw your resistance is not enough. There are factors that influence price on the market. There are factors that influence price on the market. So if those factors doesn't come in play, how is price going to reach the resistance? If those factors doesn't come in play, how is price going to reach support? So take interest in the basic things. Go through the hard way. Do it like the way these professional traders do, so that together we all make profit from the market, so that you stop feeding the market with your hard-earned money. No strategy development. So the 99% traders rely on signals, copy others instead of building their own trading edge. So that is what they do. Can I get signal from you? When you give them the signal to remain in the trade, so that the profit will grow fully for them to enjoy whatever profit that they are supposed to get from the market. Immediately they see $2, they will exit the market. Then when price keeps selling or price keep buying, that is when they want to enter new position. A small pullback, then account is gone. No Excel. Instead of them to patiently wait for price to the winning trade to continue running, they will be in a hurry to close the trade. Then they will enter new position without any Excel. So small pullback, account gone. Please, this is not how this professional traders do it. Please, I pray you also learn something from this video so that you do it the right way. I've already told you that we can't skip the positive things that these professional traders are doing and expect positive results. We can't. And even before they became professional traders, they also learn from these pro traders before them. They allow themselves to be taught. Do it like the way they did. Read books written by them. Join webinars and attended webinars. to have a first-hand experience or take something from these pro traders. Share the experience with them. Take notes. Practice. Check the results. Then they journal. When were you able to do any of this? And you expect positive results. So you should take note. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampemdako. Why it's dangerous? Why it is dangerous with regard to the laziness? Why it is dangerous? So, as I earlier mentioned, no backtesting, no journaling, no trading strategy, then poor risk management. So the 99% traders don't calculate lot size or follow position sizing rule because it feels like too much work. Yeah, it's true. This 99% traders, they feel like it's too much to calculate their position size. No, it's too much. Why Excel? Why should I trade with Excel? No, it's too much. So they will just expose all the accounts on the market. So if there's any news which is going to go against them, account, everything is gone. Just one single trade. Hey, just one single trade. Last, I was telling my community that me, I don't rush trade. I don't force trade. Before Forex, before I, Henry, was born, Forex existed. I will die and leave this world and Forex will continue to exist. Why in a rush? Before I was born, before you were born, Forex existed. This market existed. You and I will die and go and this market will continue to exist. Why the need to rush? Take it small. Grow your account on a slower pace. Don't be worried. Today your account is 100 USD. You're able to add maybe 2 USD to your account or 3 or 5 USD to it today. Another time, you're able to add small profit to it. With time, you realize that your account will no more be 100 USD. You will see maybe 20 or 40 or 50 USD on it, meaning you are in the game. But in a situation where you want everything quick, if you are not careful, you are not going to see the end of the game. You will rather quit. So how these professional traders do it is something that I've already told you that we can't skip the positive things that they do and expect positive results. So never see these basic things as tedious, as too much. It is something that they do that has helped them to remain in the game till now. I've told you that Kojo Forex is a one trader. I'm a Ghanaian. It's a one trader that I look up to. He inspired me a lot. We are all Ghanaians. The Happy Forex, the Jeffrey Benson, the Dapo Willis, the Forex King, the John Gatti, the Andy Gold, these great traders. DJ Chekele, Ghost Forex. These traders in Africa and the other traders in the developed country. This is the thing that they do that has helped them to remain in the game for long. Forex is a business that has helped them to remain in the game. We can't skip. So please don't see these basic things as tedious. See them as a very important thing that you should not run away from. So example, the 99% traders see someone post a trade idea online and blindly follow it without analysis, only to lose because they don't understand the trade. They don't analyze whatever they see online. So these big influencers, they post their win. Maybe a buy trade from gold. So they also deposit their buying gold. They post their win and sell trade from gold. So they also deposit their selling gold. Hey. Bro, this is not how they do it, crew. This is not how they do it, bro. So please, allow yourself to be taught, invest in yourself, acquire the knowledge, and do it the right way on the market so that you can make the dream profit that you are looking for. The next point I want us to look at is impatient. The 99% traders are unable to wait for the right trade setup or outcome. Yes, I've already told you. They are impatient. The impatient traders, so the 99% traders jump into the market even when there is no clear setup, just to be in the trade. Yes, as and when they are not trading, they feel like, no, the world has come to an end. The world has come to an end. As and when they are not trading, they sit behind their pin instead of them to wait for price to reach their point of interest and wait for confirmation. No, they will enter the market before confirmation. So what do you expect? You've already entered the market before confirmation. So what do you expect? When the market takes your money from your account, even without Excel, you've exposed all your money to the market. So when everything is gone, you come and blame the industry that is a scam. Keep blaming. Those who are doing it the right way are making money. You have been seeing them are making the money. Keep blaming the system. Keep blaming the system. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampemdako. So overtrading. So why is dangerous? So overtrading. Impatient traders jump into we've taken that side. Let's look at the premature entries and exit. The 99% traders enter before confirmation. I've already said that, and exit winning trades too early due to fear of missing out or lack of discipline. So last I was doing one of the webinars that I did, one guy also said that he has been blowing account because sometimes he will do all the analysis. All the analysis, and when he loses small focus, you realize that market has already taken off, and when it happens like that, you also jump into the market. I said, no, you don't do it like that. When market has already, or price has already taken off, just allow it to go. Just allow it to what? To go. When you do that, you call it FOMO, fear of missing out. Think that you are missing out, so you also jump into the market. So as you jump into the market, a small pullback can blow your account because you've not defined the trade. You've not defined the trade. So small pullback can blow your account. That's what I'm talking about. The situation where price has gotten to this point, instead of me being at this point where we had network is not loading well. Let's see if we can get the GBP USD charts. I've also done some analysis there. Then the network seems to be slow. Let's go back to the chart. As we get the network back, we'll bounce back to the chart, then we'll look at what I want to share with you over there. Remember, you are with the E-marketTubeFX and you are with your trader Henry Ampemdako. Today we are looking at how to master trading psychology. It's something that as traders we cannot do away with. Yes, we cannot do away with. So as I earlier mentioned, premature entry and exit. So you always have to wait for confirmation before you enter the market. So why is dangerous? So the next point is chasing price. So the 99% traders often enter trade late after the move has already happened, resulting in poor risk reward entry. So that is what I earlier mentioned. Price has already taken off, so FOMO, they will enter position. So with that, your risk to reward, a small pullback can take half of your account. A small pullback can take half of your account. So It's something that you should take note of. Then example, the 99% traders see a candle forming and jumps before it closes, only for the price to reverse immediately because they couldn't wait for confirmation. So this is not funny. If you are part of the 99%, all that we are discussing here is not fun. These are the destructive traits which is causing you to blow account consistently. And I pray you take note of all the issues that I'm mentioning here. This is quite a lengthy video that I'm doing just for you to elaborate on the trait which is causing you to blow account unnoticed, the destructive traits which is eating you up unnoticed. So if you are thinking of making profit from the market, it means the things that I earlier on mentioned with regard to what these professional traders have been doing, the 1% traders have been doing, which is helping them to make profit consistently from the market, you take note and practice them. Then you come to the comment section, then give me your feedback. Yes. Come to the comment section and give me your feedback. If you also side with me, how you see this video, this content that I'm giving you, let me hear from you from the comment section. Then we move on with the discussion over there so that we can make it better for you guys next time. So you should take note. Now let's continue with the next point, which is weak mindset. The 99% traders lack emotional resilience and mental toughness when dealing with losses or pressure. So as you can see from this image, it's something that most traders, these 99% traders, go through as and when they are trading. A mainly price move against them, it triggers their emotion. They can't sit calmly. You see them shaking. Price, they are losing. They see red. The litmus papers turn red. They are not seeing blue. So they keep shaking. No, I'm losing. They keep shaking. Throughout the trade, they keep shaking. You can't do this. This is not how these professional traders do. For how long are you going to continue to panic in your trade? For how long are you continue to shake? Continue to be shaking your chair as and when you enter the market. Then it means you are going to die one day. You are going to die one day out of this trace. Out of this mood that you find yourself in. One day you are going to die. This is not how these professional traders do. Sometimes some of these 1% traders, they enter position, put their TP SL there, then they will close the trade. They will just close their laptop, then they will move. If price hits their TP, fine. If it doesn't hit their TP, next time they will review their trade, then take the trade again when price reach their POI. Yes, the 1% traders, sometimes they will just enter position, put their Excel, put their their TP, then they will be playing with their case, watching movie. They don't care what the market will do. In a situation where you attach the market with your feeling, hey, the market will also joke with your heart. The market will trigger your emotion. The market will joke with your heart. If you are not careful, you find yourself at the hospital. So stop this. Make sure you build a strong mindset of which, as and when you lose trade, you will be in a calm mood, like nothing has happened, no pressure on you, of which will not cause you to destroy your trading device, like what other traders do. This most 99% traders do. One trade, the account is gone, the world has come to an end. So the trading device just hit it on the ground. Everything is gone. Why? Why did I lose? This is not how these professional traders do. I pray you also learn something from what I'm sharing with you so that you do it the right way, like how these professional traders do, the 1% traders do. Remember, you are with E-marketTubeFX and you are with your trader, Henry Ampem Dako. Why is dangerous? Revenge trading. A weak mindset reacts emotionally to losses trying to win it all back immediately. So as and when you lose trade and you want to win all back, by the time you realize the market will take everything from the account, then whatever you want to do. So the next option is to destroy your trading device. So you need to be very careful. Breaking rule: the 99% traders abandon their trading plan when they feel stressed, frustrated, or discouraged. So as and when they lose one or two trades, they will just abandon their trading plan. Then they will be doing things in a way that they are not supposed to, of which often leads them to blow their account. So the issues that we are discussing here, I pray you take note of them. And it is something that has been causing you, the 99% traders, to keep blowing account. I have been in this position before. Whatever I'm sharing with you, it's not something that I read from a book. It's a personal experience of which I've used this to prepare the slides for you guys to learn something out of it. So that as and when you open chart, you do it the right way, like how these professional traders do. Remember, you are with E-marketTubeFX and you are with your trader, Henry Ampemdaku. Today, we are looking at how to master trading psychology, what these professional traders have been doing that has helped them to remain of a top-notch trading psychology as and when they are trading, what they have been doing that has helped them to control their emotion as and when they are trading. We are done with that, and now we are looking at the destructive trade which has been causing the 99% traders to keep blowing accounts consistently, giving their hard-earned money to the market is what we are looking at. So the next point I want us to look at is low self-discipline. So the 99% traders can't stay focused or consistent, changing strategy often after small setbacks. So as I earlier mentioned, you don't need to abandon your strategy as and when you lose a trade, one or two trade. No, if that setup or that trading plan or that trading system is something that has been giving you profit, and today you encounter loss, that doesn't mean that you should throw that trading system away. No, we don't do that. This is not how these professional traders do it. This is not how they do it. You need to be consistent with that trading system. You don't abandon it like that. You need to be consistent. Just stick to your trading strategy. Stick to it. Because before it becomes a trading strategy, it is something that you have practiced, done the back testing with the demo account, giving you the results. You have been using it to trade the live account, also giving you results. So if today that system has given you or rendered you a loss, that doesn't mean that system is a fake system. It's not good, so you should throw it away. No, you have to stick to it. So example, 2 losses in a row, the 99% traders become frustrated and start randomly opening trades with bigger loss size, leading to an account blow. So I said everything that we are discussing here is a destructive trade which is causing I will not even use the word most, which is causing this 99% traders to continue blowing accounts. If you happen to be on the other side of the coin, which is the 1% traders, you agree with me, and I know every trader on the side of the coin, the 1% traders, have been through this before. The frustration, trying to make something out of the market, but it's not working, led us to learn how these professional traders have been doing that has helped them to make profit consistently from the market. And today, we've moved away from this trading lifestyle, and I'm also sharing a similar experience with you so that you also learn out of it. Then also let this be a history. Let this destructive trade be a history in your trading journey so that you also do it the right way. So let's continue with what I want to share with you. So fear, the 99% traders excessively worry about losing money or being wrong. So on the trading or in this industry that we find ourselves in, you always, most of the newbies, when they come to my DM, when they join my community, they come to my DM, you hear them or you see them asking this question: so how much can I start with? And me, I'll just make it simple and open for you. Then I also send back to them, how much are you ready to lose? They'll ask, how much can I start with? Then I also send. So last I was telling one professional trader of mine, a friend, and I said, this is what most of the members in my community keep asking me. I said, no, I shouldn't give that response. If I do that, I'll discourage. I said, no, I just have to be open to it. I just have to be frank. There's nothing I should hide from you in this community. If I lie to you today that this market is rosy, oh, everything is cool, you can just put in your money and get huge sums of money out of it today. It's not rosy like that. This industry is not rosy like that. This industry is not cool like that. You need to learn, steady, be firm as and when you are trading. Sometimes even getting the knowledge with regard to how this market works, sometimes you'll be moved by how price moves on the market. But you have to be strong. So with that knowledge, hey, it's just like a tissue paper. A small air will just blow you away. A small air will just blow you away, my dear trader. So in this industry, whatever you are depositing in your account should be money that you yourself, you can afford to lose. We don't deposit with our school fees. So last I was telling members in my community that you don't send, if maybe you have some money on you of which you're supposed to use to pay your fee, or pay your children's school fees, or pay your rent, or pay whatever pressing you or a demand that of which you are supposed to use that money to do. We don't deposit that money on the market to trade. Because if you deposit, maybe your mom needs money from you, your dad needs money from you, your wife needs money from you, your husband needs money from you, your children are demanding some money from you, your girlfriend is demanding some money from you, or your rent is due, you're supposed to use that money to pay, and you're saying, no, you want to flip that money, trading with it so that you can use it to settle those demands. Hey, bro, you blow the account. You blow, because at the moment you attach social demands, family demands to whatever is going on in the market, the money that you have in your account, you are going to misjudge the charts. Instead of you to follow your trading rule, you rather be following money. So as I earlier told you, it is when I got to understand this market that I got to know that following trading rule, following trading system, following trading plan rather bring results. In a situation where you follow money, you rather end up giving your money to the system or giving your money to the market, then you go home with an empty hand. So all I want to tell you is that whatever money that you are supposed or you want to trade with should be money that you yourself you can afford to lose. So when you lose it, you are not surprised, or you don't be surprised, so that you don't attach emotions as and when you are trading. As and when you are trading, remember, you are with E-marketTubeFX and you are with your trader Henry Ampem. So why it is dangerous? Missed opportunities, fear causes hesitation, resulting in missing high quality setups. You are afraid because you are not ready to lose that money. There will be a nice setup instead of you to join the trade. You'll be afraid. You see that you'll be there and price will move in your favor. How you expected price to move to, the direction, the bias you expected price to move to, you see it moving in that direction, but because of fear, you fail to enter the market. Then you'll be biting your hand. I should have, you regretted, I should have entered this market. Why? Then setups of which are not good, which is going to render you a loss, that one you'll be in a hurry to enter. All this in it is emotion, fear, which is controlling you. You don't have correct judgment on the chart. You are being moved by emotion, fear. It is your heart. You are rather trading with your heart, not the mind. You are trading with your heart, not the mind. In the market, we don't trade with the heart. We trade with the information that we have in our mind. We trade with the knowledge that we have in our mind. That is what we trade with. So earlier on, you heard me saying that even though we view the chart with our eyes, but we are not viewing the chart with our eye. We are viewing the chart with the knowledge that we have in our brain. Because that is what we use to interpret the chart. Then we take the right decision as to whether it is prudent for us to enter a buy or a sell. The next point I want us to look at is cutting profit too early. So fear of the market reversing leads to exiting profitable trade prematurely. So that is what has been worrying most traders. Most of these 99% traders. Small profit, they will exit the market. Then as market continue to move in their favor, they will be in dilemma. They don't know whether they should enter again. And when the evil forces them to enter, small pullback account gone. I pray you also learn something out of what I'm sharing with you, so that you do it the right way, like how these professional traders do. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampem Dako. Now let's continue. So inconsistent decisions. So fear-driven traders often ignore their trading plan, close trade too early, or fail to enter at all. So that is it. Most of these 99% traders, inconsistent decision, fear-driven traders, they often ignore their trading plan. They close trade early or fail to enter or at all because of being ruled with what? Fear. That is what happens. So example, a fearful trader enters trade and sees a small pullback and closes it instantly in panic, only for price to later move in their direction or their favor. So it is something that most of this 99%, I don't want to use most, this 99% trader, it is something that they have been going through every now and then. It's something that they have been going through. That is why I encourage you to rather seek for what? Knowledge. If you seek for knowledge, you will not do some of these things. You will move away from it. If you seek for knowledge, you will not do some of these things. So, greed. The 99% traders have excessive desire for fast profit and unrealistic returns. Yes, this 99% traders, they've seen Kojo Forex buying Cybertruck. They've seen Habi with the Cybertruck. They've seen Jeffrey Benson with the Cybertruck. They've seen Dapo Willis with the Cybertruck, or Bugatti with a flashy car, gone for shopping in Dubai, living luxurious life. They also want to live that same life. So with that 1,000 USD, you want to flip it to 100,000 so that you too can go to Dubai and enjoy. So you over leveraging, entering so many positions, small pullback, the 1,000 USD is gone. Another time, deposit again, everything gone. Please, these professional traders, these influencers that you see them on social media, they've been through it. They've been through fire. Today, you are seeing their success story. They've been through it. So you too, allow yourself, go through the process so that you'll be refined. Then one day, you can also show your results to others that, yes, I went through the process. I went through the fire. And today, this is my success. This is what I encourage you to do rather than be in an excessive desire for fast profit and unrealistic returns. Why it's dangerous? Over leveraging. Greedy traders use large lot size to make quick money, ignoring risk per trade. So that is it. Most of this 99% traders, they ignore risk management, just enter position anyhow. So small pullback. The pullback is something that you cannot do away with on the market. The pullback, market moving, then you see it's coming back. It's something that you cannot move away with. So as you continue to over leverage and price doesn't go in your favor, if not define your trade, price doesn't go in your favor, do not expect anything like any magic on the market. If price is heading towards your SL, is heading towards going to increase your drawdown to blow your account, that one you can't do anything about it unless maybe you close the trade in loss so that you reserve the small amount or balance left. Apart from that, you don't have any option. If you are losing, you are losing. If you are winning, you are winning. So it's something that as a you being part of the 99% traders, you should take note and desist from it, so that you do the positive things that these pro traders do, so that you will also make that consistent profit from the market. The next point has to do with holding trades too long. Instead of taking profit at the target, they hold trades longer, hoping for more, only for market to reverse. So they don't understand price action. They don't understand what goes on the chart, the key zones on the market where we have support or resistance. They don't have any knowledge about it. So they've seen the market selling, they've entered the market, they are waiting for price is heading towards, price is selling, it's heading towards support. They don't know that when price head towards support, there are two things that happen: either price will reverse or will continue selling. So if price is heading towards support, that side can be your TP, of which they can exit the market. They are not aware. So they will continue to be in the market hoping for bigger profit. Then the market will reverse and come and hit their their Excel. Then they will blame the system that it's a scam. Just seek for knowledge and it will set you free. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampem Dako. So we are still on why it's dangerous. Ignoring risk. So greed blinds them from following a trading plan or accepting small wins and leads to big losses. So it's something that is worrying this 99% traders. A greedy trader risks 50% of their account on one trade, hoping to double their account overnight, but a single loss wipes it all out. Yes, I like the term wipes. A single loss wipes everything. How can you deposit maybe a 500 USD, then just a single bad trade will take all the 500 USD? So if these pro traders, these professional traders, these influencers, if this is how they did it, are you going to see them? I said Kojo has been in this industry for 12 years solid. He started 2012. Kojo started 2012. So if he has been doing it like that, bro, are you going to see him today? Are you going to see him today? I'm referring to Kojo because he is a Ghanaian and part of these professional traders in Africa. All over, we see him all over. The Jonkati, these big guys, we see them all over. E-marketTubeFX is a young trading community which is building branches or springing up. If they keep blowing accounts like that, are you going to see them? Just one single trade, taking everything out from your account. That's not how they do it. So you always stick to your trading plan. Stick to it. You are not supposed to raise more than 1 to 2% of your trading account. Members in my community will confess. If I post signal, just like what you are seeing, like what you are seeing on your screen, that is what. Do not raise more than 1 to 2% of your trading account. So whatever signal that I post to my members that we are going to buy or sell any asset, that notice is there. So in as much as we are looking for money, we do our best to protect what we have in our account. And that is something that as a trader, if you adopt, is going to help you to protect your capital and remain in the industry for long. So you take note. So 5 rules of 1% traders. That is the pro traders. That is what you are seeing on your screen. The 5 rules. Yes. So the first one has to do with what? Wait for right entry. Define loss before entry. Then the next one is what? Accept that market gives. So you should accept what market gives. Then the next one is what? Focus on the process, not on P&L. You should focus on process, not profit and results. Then you should take small break. You should take small break. So that is the routine. Always you wait for the right entry. You define loss before entry. then you accept what market will give you, then you focus on process, not P&L, profit and loss, then also you take small breaks. So that is the 5 rule of professional traders, or this 1% traders. So guys, this is E-marketTubeFX, and you are with your trader Henry Ampem Dako. So E-marketTubeFX, we are available on YouTube, Facebook, Instagram, TikTok, Telegram, WhatsApp. We are all over. So if you want to join our community so that you can also do it right way, like the way these professional traders do, you are always welcome. And as you've joined me on YouTube, do not forget to subscribe, you like and share. I've already told you that E-marketTubeFX is a trading community for newbies. E-marketTubeFX is a trading community for traders who are struggling to make profit from the market. So if you are struggling to make profit from the market, or if you are doing your best to know how to trade this market, make sure this channel will be on your watch list. Make sure this channel will be part and parcel of whatever you are doing, so that anytime I post any content with regard to this market, you will be the first person to watch. So you make sure you subscribe, you like and share, because this market or this community is meant for you. So whatever I've discussed with you today with regard to how to master trading psychology, whichever side of the coin that you belong to, make sure, if you happen to be part of the 99% traders who keep blowing account, please learn something from this video. You can watch this video again, right? Don't just watch. Make sure you have your pen, your book with you, so that the issues that I've mentioned in this video, you pen down. Then you practice the positive one. Then the bad ones, you do away with it. Practice the positive one. Now, what are those positive ones? The positive things that these pro traders have been doing, which is helping them to remain of what top-notch trading psychology as and when they are trading. Things, the positive things that they have been doing that has been helping them to control their emotions as and when they are trading, are the things that I want you to practice. So whenever you see these professional traders with their big wins on the social media pages, these are the things that they do behind the scene. It's not magical. It's not magic. These are the things that they do behind the scene, of which I'm sharing with you today. I pray you also learn something from it, so that you too can better your trading journey. If you're also looking forward to learn how to trade this market, E-marketTubeFX is also here for you. You check the description of this video, you see my Telegram group link there, my WhatsApp group link there. Join the community. Then also you also learn more with regard to, and also take some signals as to how you can trade this market, take you through the demo, practice and the rest. Then finally, if you master how to trade this market using the demo, then you also join us trade live. Then you all make some or print some dollars from the Forex market. So today, this is what I have for you. I pray that whatever I've discussed with you in this video, you are going to learn from it, especially if you happen to be on the other side of the coin, which is the 99% traders, so that your trading journey will be of a smooth one. Long live E-marketTubeFX, long live Forex. Bye-bye.